Okay, great. Let's get started. So if just to kind of kick things off, what we will do today is go through a number of markets. Any markets that you have on your mind that you want to look at, just let me know. So make sure you understand that the strategy that I go over, that I developed many years ago, is all around supply and demand. Identifying where banks are buying and selling in the market so we can buy and sell there also. Everything we're going to talk about today and the markets we're going to go over and the strategy rules that we're going to talk about are equally applicable to stocks, futures, Forex, options, bonds, real estate, cryptocurrency, anything. Okay, so we can look at any market, and the goal of the strategy is to answer two simple questions. Where is price going to turn and where is price going to go? Period. Once we do that, we think we can then wrap our rules around it and make some money. Does that make sense? Okay. So if you think about those two questions, where is price going to turn and where is it going to move to, right? Where is it going to go? Let's start with the first one. Well, what causes prices to turn? Right. It's a supply and demand imbalance. From my background on the trading floor of the Chicago Mercantile Exchange, okay, having handled buy and sell orders from some of the biggest financial institutions in the world, it was very clear that price will keep falling until it reaches a price level where demand is either equal to or greater than supply. And just the opposite, price will rally until it reaches a price point where objectively supply exceeds demand. So if we understand that that's what causes prices to turn, a supply and demand imbalance, then we want to be able to look for and identify those significant supply demand imbalances in a market. And that answers the first question. Answering the second question, where will price move to? So supply and demand, another way to phrase those is unfilled buy and sell orders, right? Unfilled buy and sell orders. So think about it. If unfilled buy and sell orders cause prices to turn in a market, then filled orders facilitate price movement, meaning if a lack of supply and demand, right, makes it very easy for prices to move. Does that make sense? Everybody understand? Okay. All right. And again, if you have any markets you want me to take a look at, doesn't matter what they are, stocks, futures, Forex, options, spot Forex, you name it, just put it in the chat and we can take a look. If you have positions or any ideas, or if you're looking for the next turning point in a certain market. Also, make sure you understand that everything we talk about with regard to the strategy, we apply equally for daily income trading, weekly income trading, and building and protecting wealth. Make sense? Okay, great. Good to see everyone. Good to see you guys. Yep, we can certainly look at those markets. And we have the S&P up now, so why don't we start there? And Tim, I assume you're talking about the S&P futures. If not, just specify, but sure, we can definitely start there. So if you've been in any of my YouTube sessions, the last month or so, when we look at our larger time frame of the S&P here, so let me just say one more thing before we dive in. When I look at a chart, any time frame, when I talk about a chart, any market, whatever, all I'm focused on is identifying unfilled orders and filled orders, supply and demand or a lack of supply and demand. That's what my eyes go to on a chart. Okay. So as I've been pointing out in the YouTube sessions, we're looking at a weekly chart of the S&P. All of this from 2,800 down to about 2600, actually a little bit lower. Does this picture here represent filled orders or unfilled orders? And I know if you've been in the YouTube sessions, we've been talking about this, but it represents filled orders, yeah. So that means price should have a very easy time moving up and down through this area, and it has been. Okay, so we want to look for key levels above and below that area. So let's do that. Once we go out here to a larger time frame, we see that we have supply much higher, significant supply that is, much higher, and significant demand much lower. Okay, and there they are. There's really not much to stop prices from moving up to the 28, call it 90 area. There's also not much to stop prices from falling to the 25.10 area. And you see the news that's having the biggest impact on price lately is the whole U.S.-China stuff, right? Or Trump's tweets, I guess. But it's all around that. Yeah. So now that we know our landscape in the larger picture, bigger time frame, now let's move down a little bit, okay, and go to some smaller time frames. And we'll see right in the middle of where we're at in the S&P, and we'll get to some of those other markets in a few minutes. Notice we have a little area of supply sitting right here, okay? And now we also have a little bit of demand sitting down here. And we're still on a very, very large time frame. Okay, so as far as the bigger picture goes, there's not much to stop price from moving up to 27.08. There's also not much to stop price from moving down to 26.38. Okay? So those are your larger time frame areas. Now, if you look at the charts I have on the screen, the charts on the left, we have a 5-minute chart, and so often I'll make this a 2-minute chart or 1 minute. But we have this very small time frame on top and like a 10-minute chart below it. These two charts, opportunities we find on those time frames, are typically for daily income, meaning if you're looking to produce money each day, create a daily paycheck. These charts in the middle, right? What we're looking at there is those for me are responsible for weekly income. Typically a 30 or 60-minute chart on top and about a 4-hour chart on the bottom. And there's nothing special or magic about these time frames. Right? So if you're looking to hang on, trades that maybe you'll get some bigger moves out of that last 2-3 days on average, those opportunities can be found here. The charts on the right are your wealth building and wealth protection time frames. Daily, weekly, even monthly. All right, so let's go down to the small. I think we have a good idea of where prices are in the bigger picture, our turning points, both and for weekly income. You see the levels here. And then on the smaller time frames, if you're looking to do some more active trading today, there's actually a great level sitting right up here. I've already taken full disclosure, one short position in the S&P today, and you'll see why. Oops, it wasn't, here you'll see here. There we go. We wanted to get it, like up in this area. Does that make sense? And even though prices could certainly move higher today, the last couple hours or so, we've gotten pretty far away from demand. And you should see some demand come in around 26.58. Not saying that's like the, an amazing buying opportunity there, but 54 to 57. Okay, we kind of have two demand zones on top of each other. And that's why you're seeing price fall so hard right now. Right? I mean, it's not a big drop, but you're seeing it fall easily because price is moving through a patch of filled orders. Okay. All right. So I think we've covered some, the wealth side, the weekly income side, and then some more active trading opportunities here in the S&P. And I would, we could go over the NASDAQ, but it's going to be the same, same type of levels. Let me scroll back, make sure I go over everything that you want to go over. The Swiss and the yen, we can certainly look at that chart. Let me do that here. So here we go. We're just waiting for these charts to update. And let me get back there. Okay. All right. So looking at this time frame, my eyes always go to the bigger time frame first. Just to see kind of where we're at in the bigger time frame. Are we close? Yeah, Robert, good point. Market loves to test where they've already been. Now, do you understand why that is? It's so important that everybody understands the logic behind all that stuff, all this stuff. For example, one second. Sorry about that. So have you ever noticed that price like always goes to your supply and demand zones? Have you ever noticed that? Does everybody understand why that happens? Why does price always go to your supply and demand zones? Yes, they turn at those levels, but why does it also always go there? Well, think about it. What makes up supply and demand? Like what actually is supply and demand? It's orders, right? Banks, institutions. Exactly. So there are the biggest incentives in the market each day is prices going to and from those levels. So that, the big money can fill those orders. All right. Let's take a look at this market right here. And so nothing much in the daily. Let's go to this 4-hour here and take a look. Okay. So I'm looking at current price. We're looking for demand below, and then of course supply above. So much of this is going to be a problem. But let's go down and look at that on a smaller time frame so we can really pinpoint some opportunities. Okay, so the first one that comes into play here is this one. Right here. So there we have a demand zone sitting just below current price. Okay. Notice too, I want to add a little something here that we don't normally talk about. No, Nick, I wouldn't say they manipulate the market. And again, I started on that side of the business, and I have no reason to defend that side of the business. But I wouldn't say there's a whole lot of manipulation that goes on. Yeah, I wouldn't. It's a little different than that, but we can chat about it. So notice that this demand zone is sitting just below all this. Notice prices, we're running into trouble here, right? Obviously, there was supply up here, okay? But eventually, the supply-demand equation right here flipped and prices took off. They took off in strong fashion. There wasn't too much trading at the level. And now we also have a nice big profit zone to the upside. Well, I shouldn't say big yet, but at least a decent initial profit zone. Meaning the fact that price got up to here where I'm pointing, the high, okay, we now know that there's no significant supply until that price or higher. Okay. So we have a nice little buying opportunity at 113.90. Now, let's look left. So I'm just going to put a horizontal line in here. The only reason I'm going to do that is so we know exactly where we're at and we don't make a mistake when we look left as far as finding supply. So there we go. So now I know I need to look above this line to find a supply zone. We have that right here. Okay. That's not a high quality zone, but I would not short against this. Again, I would not risk money on a short against this, but as far as a profit target for a long position from the demand zone below, it's fine. Okay. So there you go. So that's the opportunity. Now I want to show you exactly how we set these up. Okay, so I'm just going to put a line down here and then we'll move it around, we'll fix it. So there's a red line there. So let me just see how much is there. Yeah, so I would just go like barely like 5 ticks below the level. You're probably fine there. 5 pips. That's really like right up in here. Okay. And then as far as the profit target, all this needs to be very mechanical. You need to be able to execute strategy like a robot. That's what's key. So now we have our demand zone here and our supply zone above. Adriano, no confirmation before entering the trade. I'll explain that in just a minute. So now, how do we find our profit target? Well, I would never buy at demand and hold it all the way to supply, right? If we hold it all the way to supply, we're going to have a hard time getting filled on our profit target, okay? And so if we want a little bit higher winning percentage, then we want our profit target before the opposing supply zone. What I like to do to make this very mechanical is just take a certain percentage of that. I've always used 80%, and that way there's no thinking involved. Okay, so you look at the demand zone here, 113.90 compared to 115.29, and take 80% of that, and that becomes your level. Now I'll just put a line in here. We don't have to we have to do the math right now, but just so you get an idea, I'm going to make this line blue for the target. Okay, and let's just say this blue line is 80% of the, right. And what you could do is use your Fibonacci tool. So you'll see, you could set it to 80. You'll see exactly where 80% is. Does that make sense? So you're buying here, profit target of 80% of your available profit zone, and then your stop, again, mechanically just 5 pips below the level. Now don't get stuck on the number 80. Okay, if you want to make it 85 or 83 or 88, whatever, 90. Okay, but if you want a higher winning percentage, bring that number down. If you don't, then bring that number up. Now, one other thing to add to this, as we look for opportunities, I always want to make sure that I'm only looking for opportunities where the chart is offering me 5 to 1 or greater. Does that make sense? 5 to 1 or greater. I'm not saying you have to do that. You decide whatever you want. Make it 10 to 1. Okay. I know my son, he's pretty much 10 to 1 or greater, meaning the chart has to be offering him that. Okay. And if so obviously, let's say he finds an opportunity where the chart is actually offering 10 to 1, meaning he's risking 1 to make 10 according to the supply demand zones. His profit target will be at 80% of that, right? Okay. All right, I think you get the point, and I think we spent plenty of time on this market. Didn't mean to spend so much time there, but let's take a look. ATR, Robert, no, I don't use ATR. I would never use ATR, and I can explain why if you want. Let me just go back and make sure. Looking at all these markets, okay. So let's go back. I've also well, never mind. Let's go to these markets here. Hang on. Yep, we can look at the euro, no problem. So if you're in my YouTube session, this is that level that hit. Was anybody in that session? Anybody sitting in this trade? This is a level we pointed out in that last session. If not, it's okay. You know, John, that's a good question. Does he get fewer trades because he's looking for 10 to 1? He gets plenty of opportunities because he's watching, a bunch of markets. Now, he primarily trades the futures markets, but, there are plenty of major global futures markets. So remember, 10 to 1 doesn't have to be on a daily chart. I could find 10 to 1 on a 1-minute chart, or I could find 10 to 1 on a 60-minute chart. He doesn't day trade at all. He hangs on to positions, but he's typically in positions for, a few days. But yes, if you're, obviously you're going to get fewer opportunities with 10 to 1 or something like that than you are with like 4 to 1. Sure. But remember, at the end of the day, this is what a lot of people lose sight of. I know it's going to sound so simple, but a lot of people lose sight of the fact that this is about making money. Everything that we consider as far as strategy and decisions needs to all be focused on making money. Okay. And again, I know how crazy that sounds, but I look at what some people do and it's like, why would you do that? That's the opposite of, you're never going to make money doing that. I'm just reading back here. Yeah, yeah. No, I'll try to go over, and I try to go over more and more, Carlos. No, those are good points for sure. Right. Yeah, and one of the things with the levels, we could go over that on the next one, is that whole concept of location, location, location. That is so key. So let's do that. Let's get to the next market. Looks like we're on it, the euro. And before we go to, no, we can just stick to the euro. So weekly chart, again, if you're in those YouTube sessions, this is where we suggested that the market was going to be for the next few weeks. Really just wedged in between these two levels. Obviously, the dollar has those same two levels. So we know that. And yeah, we're just kind of sitting in there. So not a whole lot more information. We don't need to spend much time on the daily chart because we really don't have any clear, significant supply demand close to current price. However, when we get to the 4-hour chart, one thing we have to be aware of is this. So let me just put this in here. And again, if you've been in my live trading sessions, you kind of know what I'm doing here. All right, so does that picture, the white box, does that picture represent filled orders or unfilled orders? Filled orders or unfilled orders? Yeah, filled, right? Filled, not balance. Careful, Carlos, with that. And I know you might not mean actual balance, but yeah, we'll talk about that in a second. Yeah, filled orders. Okay, all this wide and whippy price action, as much price action as here, period. That means there's tons and tons of orders filled here. You can buy and sell as much as you want here, no problem. If there was a pocket of significant unfilled orders here, the picture would not look like that. It would look very different. Okay, it would look very different. In fact, it would look like that. So what we want to do is look above and below this white box. And for those of you who've been with me for so long, you've seen this before. So often price just goes a little bit below the white box into an objective demand zone and shoots right back up through the white box. Or it'll go up to this yellow, supply zone up here, the box, and I'm sorry, it'll come out of the white box, shoot up to the supply zone, and then boom, come right back through the, the box. So we have the supply zone up here, which is quite a ways above current price. But let's go look for demand. And again, I'm just going to put a horizontal line in here at the bottom, just so we have a reference point. we're going to scroll left until we hit price. And there it is. Oh, and now we see sitting below current price, we have a demand zone. Not fresh though. So let's move that down to the fresh one. And in fact, what I'm going to do here is I'm going to, so I'll talk that balance equilibrium concept in just a second. Let me just get our two demand zones in here and then we'll chat about that. I want to be very specific with following rules. Nick, you're talking about this supply level over here? That one? No, not up in here, because price spent, it was trading here for a short period of time, collapsed away in strong fashion. So those two factors, okay, suggest a pretty big supply-demand imbalance there. Notice when price comes back to that area here, it barely touches a level and falls, giving us, secondary evidence or confirmation that supply exceeds demand up there, right? Okay, just go back here. And these two, same picture, just opposite. Very little trading, strong rally away from that level. These are the two levels that take price through that. And, price has not been back here since. So there you go. Now, if you want to see this on if I scrunch this up, you won't see it. Okay, so I think you get the idea there. Everybody pretty clear on that? Those demand zones begin at 109.85. That's 109.85. So, a couple people mentioned supply, demand, and equilibrium or balance, using those words, equilibrium or balance. If you really think about it, it's always an interesting concept for me to talk about because it's the whole supply-demand story. Really, a market could be in one of three states, right? It could be at a price point where supply exceeds, hang on one sec. Give me 1 second here. All right, sorry about that. So think about, let's talk about this for a second. So a market, any market, right? We're talking the financial markets here, but it could be any market. It could be the market for toothpaste. It could be the market for anything. It could be in one of three states, right? A price, in other words, market price can be in one of three states. It can be up, way up near, at price points where supply greatly exceeds demand, okay? And at supply, what is that? What does that really mean? There's competition to sell and a lack of demand. So that competition to sell without demand pushes price down, okay? Or market prices could be at a state where demand greatly exceeds supply, meaning you have all this competition to buy, but not enough sellers. Okay. So, and that pushes price up away from demand. Or price could be somewhere in between. Now, what everybody says and what all the history books say is that's equilibrium, right? You have an equal amount of balance or equilibrium, right? That's what all our textbooks say as we're growing up. But is that really the case? Think about it. When price is in the middle, in between supply and demand, are you at equilibrium? Is there balance? You see what I'm saying? Okay, not really. In fact, in just about any market, supply and demand is always out of balance. It just takes a certain period of time for that unbalanced equation to play out, right? It's much more balanced than out at the extremes, but be careful thinking the word that kind of scares me that not doesn't scare me, but people having it so ingrained in their head that scares me is that whole concept that if in the middle there's equilibrium, okay, because that suggests that price is just going to stay there, and it won't. It doesn't. All right. So let's keep going. I think we're good on the euro. Now, what should we do in the middle here? Well, we could go down to smaller time frames and certainly find some little day trading opportunities. That's not a problem. But we need to be careful. Are the odds of you being correct, right? Your probability, for example, the odds of you being correct taking trades in here high or low? Think about it. If you were to put a scale on this chart, for example, okay, if you were to put a scale on this chart that weighted your odds of being successful in picking a trade, how would that look in the white space versus up here near supply and down near demand? You see what I'm saying? Your percentages go way up as you get away from this white box and towards supply or demand. Yeah, Carlos. Yeah, there's new orders coming into the market, or more often than not, much more often than not, it's an unbalanced equation, okay, with a lot of orders on both sides, but it's still an unbalanced equation that takes a certain period of time to play out. All right, I think we're all tired of looking at the euro, so let's move on here. And let's go to a market like oil, because I see there's some requests for oil and USO, and let's do that. So let's go to oil. So here's oil. Just remember where you're at on the weekly chart, right? Not a whole lot has happened. And again, for those in the YouTube sessions, here's what oil's been doing for us. We identified supply above, demand below, and not a whole lot to do when price is in the middle. And price is like almost exactly in the middle now. So we need to be careful planning out any trades that are close to current price, because the odds are not stacked in our favor there. Okay. So I think you get that point. All right, let's go down a couple time frames. In fact, what's going on up here? Let's see this. Oh, those are old lines from before. So let's go to, let's see here. Okay. So knowing that we're in the middle, oh, here's a little nugget that you should remember. Anytime I'm looking to, maybe actively take a trade in a market where price is in the middle between supply and demand, knowing that the odds are not stacked in our favor because most of the orders are filled here. Right here is where you have the least amount of unfilled orders. Okay. We do have a little supply right here, right? But not a big imbalance. So watch. Now we go on to the small time frame, and we see that we have two little demand zones down here. Well, if we were in the bigger picture closer to demand, I would say this first level here, I would just be comfortable buying it there with a stop, just on the other side of it. But when price is in between supply and demand, I would always either combine these levels or take the lower one. Does that make sense? And what we're doing there is creating a scenario for ourselves where we're trading with a pretty bigger imbalance than if we just took the first level. And that's because price is right here. Does that make sense? Okay. All right, so let's keep going. Not a whole lot to do in oil. Again, you have these two little demand zones down here, so I'd be good combining them. In fact, I would just take the lower one actually. Okay. All right, let's look back and find the next. Oh, USO. Yeah, we can, since we're on oil, why don't we go to USO? So for those that don't know, USO is the ETF for oil. So if you want to trade oil like a stock, here's your market. Just waiting for these charts to update. Typically when people trade USO, they're using options to trade it. And okay. So this chart looks identical, obviously. It has to. But there's really not much to do in USO really until you get to here. Yeah, this market is going to be, and look, there's an options play here too. There's a couple of them actually. So there's that, and then there's this right here. Yeah, I'd be very surprised if oil moved out of this range anytime soon. So, and I know there's all this OPEC talk. Everybody's cutting production. All the oil producing nations are all cutting output, right? Because they want prices to go up. Now, if you believe they're going to do that, I've got some, well, you know where that's going. Okay. So if anything, you know, the way that you use all the OPEC news is literally the opposite, right? If they say they're cutting production and prices into supply, that's probably an amazing sell, right? Because what is that saying? Everyone has a lot of oil to sell. And anyway, let's just get back to the charts. At the end of the day, if you didn't know any of the news and just traded the charts, that's all you need to do anyway. So yeah, not much to talk about here. Price just came down and touched the demand, so that's, you know, telling us there's probably a ton of demand down here. And of course, we haven't even attempted to come back to supply after collapsing from it. And don't forget that the drop up here was from our weekly zone. So nothing has changed since, you know, we've been talking about oil for weeks. It's just short rallies, short rallies, short rallies. Keep betting to the downside in oil. You know, on rallies into supply. Okay. Yes, exactly, Nick. That's the plan. All right, let's look at another market or two. Oh yeah, we haven't covered the New Zealand dollar yet. So, or did we? I don't know, maybe we didn't. Oh yeah, this is another one from our last YouTube session. I don't know if anybody's still hanging on to that one, but that was a really quality supply zone up here. You'll see it. We actually combined two levels, if you remember that. So there's two levels there. We really just touched the level and turn. But so I know we're kind of far from there, but before we move on, another rally into this level is very shortable. We would just want to short on a new high above this. Above this, right? So whatever price this is up here, okay, right up in here. So above 69.70, you know, anything above there is probably okay to short, and within the supply zone. Just make sure you're okay with the risk. And remember, for those that are new, oops, the risk is determined by ultimately your, you know, when I say risk, I mean your ultimate dollar loss, okay, your money loss. And how you determine that is, you know, you take your entry price, which is right here, and then wherever your protective buy stop is up here, whatever that distance is, and then you just adjust your position size to make sure you're never risking more money than you're comfortable losing. Make sense? And always make sure that you're trading with a, you know, with a risk, you know, that your risk is never too much so that you're not okay taking the trade like a robot. Like if you're abandoning your plan, or you know, you're moving your, how many people are guilty of moving their stops, adjusting their profit targets, things like that. You know, most of the time people that do that are not making money. You want to get to a point where you're just entering the entire position at once. Entry, stop, target, and then you leave it alone. Don't touch it. Don't think about it. Don't look at it. Don't touch it. No, I don't think a trail stop is a good idea at all. Okay, almost everybody that use trail stops will tell you that they get knocked out of really good positions too early. And a trail stop is going to completely change your initial risk reward. So, you know, the whole reason you got into the trade is because you had a quality opportunity and a risk reward scenario that was attractive. Well, you throw a trail stop on there, you just kissed all that goodbye. So no, I would never use a trail stop. Okay. You don't hear banks and financial institutions talking about trail stops or things like that, or trend lines, or, you know, chart patterns. You think Goldman Sachs gets together every morning and says, all right, who's found all the triangles and circles and stuff, and don't forget your trail stops? No, they don't do that. I think you get the point, right? If you're not making money at this, if you're struggling, it's only because somewhere in your thought process and your strategy, you're thinking and acting like a novice retail trader. And that's not a knock on anybody. The goal here, especially the sessions we do, is to, you know, stop doing that and start thinking like a professional. Start thinking and executing like a pro. That's all. Okay. So here's the New Zealand dollar. Okay, so we have a decent little level up here at the whole number. We're not close to it at the moment, but just so you know where you're at in the bigger picture, here's the daily chart of that market. Now let's go down to a smaller time frame. Okay. All right, so we do have some demand below. It's pretty far from current price. But when we look above current price, we really don't have any significant supply until quite a bit higher. And again, I'm just following very specific strategy rules. So we don't have time, obviously, in this session to go over all those rules. But there you go. Again, another market where price is in the middle. So there's not a whole lot to do here if you're looking for that weekly income or wealth building. Now, if you want to, you know, if you're looking for daily income, you want to day trade this market, you have some great levels here. Let me just point them out. There's one. That's the supply side. And oops, right down in here. Okay, there's other levels, but these are the two quality fresh ones above and below current price. Yeah, those were the supply demand levels on the daily for the Kiwi, yes. Oh, I gotcha. Yeah, ultimately this whole thing was a pullback into that level, so good catch there. I saw that, but when you go down to a smaller time frame coming out of here, you have another fresh level. But good question. That question tells me that you definitely know what you're doing and what you're looking for. All right, so there you go. We've covered a number of markets. I know we have to wrap up here, but it was good spending time with you, and we will see you. I think there's another session next week, and if you have any questions, just let me know. But we will see you. We'll see you next time. And next time we're going to go over more specific strategy rules, and then we'll also apply it to the live markets. All right. Have a great day, everybody. We'll see you next time.